Hey guys, welcome back. If you haven't subscribed yet, please subscribe. And if you like this kind of video, please hit like. There's more of this stuff coming, more in-depth psychology and trading related stuff like this. So hit the like button if you like it, subscribe to it to get alerted to stuff like this. Anyway, number 3, let's move on. Personality. This is a big one. Honestly, I think this is the biggest one of the lot. Why do I think this is so important? Because there are guys out there who are so good at analyzing things. They take their time, they're methodical, they're logical, they look through the decision-making process, they have pros, they have cons, they're sitting there, why is this a good trade, why is this a bad trade, that outweighs that, that outweighs that, where's my risk tolerance in this, how much am I prepared to risk, where's the best entry, all those kind of things, and then they come up with a great trade out of it. Now stick that person into an active day trading environment and they are going to drown. Right, they're just going to drown because they haven't got the time to do that research. They haven't got the time to think about what they're going to do. It just does not suit them. So, if you're thinking about your decision making, what you're comfortable with, how good you are at decision making in terms of the speed of decisions, and then from a perspective of, let's put a day trader in the swing trading position. A day trader will still have a broad strategy that he's looking at and how he's approaching the market and all those other things. So he's still got boundaries, but he's still making decisions on the fly. He sees a set of variables, a set of parameters, a set of inputs from the market or whatever he's looking at, and he makes a decision very, very quickly, because if he doesn't make that decision very, very quickly, then he's going to miss out on the opportunity. So you see the two kind of people there. If you stick the methodical person in a day trading perspective, he's going to struggle. And then you stick the day trading guy in the swing trading, he's going to struggle because he's frustrated at how long it's taking for him to be able to make the decision. Yes, I'm sure that either of those will do reasonably okay if they really want to put their minds to it. But seriously understanding about what your strengths are and what your weaknesses are is going to allow you to choose whether you want to be day trading or whether you want to be swing trading. So that's broadly speaking. Now, if we drill down into that a little bit more, again, it's a case of how much time do you want to spend? You may well want to be a day trader, but are you the type of person who goes crazy sitting in front of the screen all day? Or are you the type of person who is very comfortable sitting there all day long, trading in and out all day and executing and then coming out the screen within the day? That is something as well that comes into your mind if you're going down the path of day trading. Perhaps if you don't want to sit in front of the screen all day long, you want to look at a strategy that just involves trading the opens or gaps or specific things, or being alerted to specific opportunities and then coming in, trading those for a few hours and then stepping back. Or if you're the type of guy who's happy, or girl, who's happy to sit in front of the screen all day long, looking for opportunities as they come, then you don't need that kind of strategy. You can have one market that you're very, very familiar with, very, very in tune with, and trade in the different nuances and the different swings and the different movements that that market does, which you wouldn't be able to do if you were away from the screen. So that's one thing to look at. From a swing trading perspective, the thing is a case of how much volatility you can stomach. And we talked a little bit about this in terms of money, but also this is going to be in terms of your strategy. And just let's briefly touch on the different types of strategies. If you're trading a pair trading mean reversion strategy, you are going to have, generally speaking, I hate to generalize in the market, but sometimes you have to kind of put these things together and reframe them in your mind. But generally speaking, if you're trading a mean reversion pair trading strategy where you're trading kind of the ebbs and flows of two slow moving stocks, let's say BP and Shell, you are buying BP at the low, selling Shell at the high, and kind of waiting for them to come back in. That's a very calm, slow strategy that's going to take some time to come good. You know exactly what you're looking for. There are no kind of external influences for that. It's a slow burning chugging strategy that potentially that is going to make you the money doing that. Now flip that on its head and say, listen, I'm swing trading Snapchat, I'm swing trading Netflix, I'm swing trading biotech stocks or whatever it may be. That's going to be a way more of a stress, if you can consider that, a way more of a pressure onto your risk tolerance and to your mindset, then that kind of thing be. Now, obviously, if that's what you're seeking and you enjoy that and you're quite comfortable with those equity swings, you're quite comfortable with picking out those kind of trades, then that's going to suit you. If you're not comfortable and you need to dampen off those oscillations, dampen off those gaps potentially that you see in the morning. If you're holding some kind of tech stock overnight, you're going to see gaps, whether that's with the NASDAQ or whether that's just on individual news flow. If you don't like those, you're going to have to dial down to something a little bit calmer, a little bit slower. Some of the big kind of bellwether stuff, blue chip things that just hardly move. They're an industry that keeps going. There's no specific news flow on them. They might beat earnings very slightly, but they're never going to surprise people, and you're just trading those from those perspectives. So it's really understanding what you're good at, your strengths. Are you good at making decisions on the fly? Are you better at analyzing stuff before you make your decisions? That's going to be your day trading, swing trading perspective, forgetting about time and money now as well. Are you tolerant to big gaps in your equity? So if you're risking a certain amount of money, are you prepared to go to bed and wake up the next morning and see that quite dramatically moved? That may mean that you don't want to be involved in stocks. You may want to trade currencies because you don't want to give up that overnight risk that you do have with stocks, with gapping, and perhaps even currencies. You might only trade the Monday to Friday because you don't want the overnight weekend risk of something coming out from that country in the weekend. So these kind of things are all things that you need to think about when you're deciding on the type of trader that you want to be, the type of markets you want to get involved in, and the type of frequency that you want to do. So taking the time to work out, and it's like an honest appraisal of yourself as well. Sometimes we can overcome it and say, well, yeah, I don't mind sitting in front of the screen all day, but actually when you think about that, you might say, I'm very good at making decisions on the fly. I'm very good at that, being disciplined as well on the fly, but I really don't want to be sitting there all day long because I think my attention will flag. I mean, I know a trader who has made a decent amount of money, kind of 7 figures per year regularly, and he knows that he can't trade in the afternoon. He just doesn't want to do it. He's like, listen, I know I'm weak in the afternoon. I don't even pretend to try and overcome it. I just trade aggressively in the morning, and then I know that my ability to process stuff goes way downhill, so I just switch off the screens and I go and do something else. But he's recognized that, and he's managed to carve out a living for himself. The thing is with trading, it's not about, you don't get paid more for the longer you sit in front of the screen. You get paid more for making the correct decision and for taking the risk in the right moment in time. So that's worth thinking about as well. So take some time to think about your personality, how your decision making process works, what do you like to do, what you don't like to do, and what you think would be the best way in terms of how you interact with the market, and then fit a market into that, and then fit a time scale of swing trading, day trading into that. You'll come up with a much more of a narrower pattern now, instead of flicking from bits and pieces to bits and pieces of how you're going to trade and the focus you're going to give it, and where you're kind of going to narrow your focus a little bit more consistency.